Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantac Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, what we've had is the dollar, which is strengthening. I mean, it's been strengthening for the last week and a half, but certainly this strength has been accelerating now, and this is coming as we're seeing yield differentials sort of once more back on the table as the key drivers of forex markets. And we've seen that the Treasury yields pulling out towards 3% and above on the 10-year yield was a key driver, and that was a level that the markets were looking out for. And it's interesting that the dollar has remained strong with that move. A little bit back on that from that 3% level, but certainly still, I think yield differentials are a key factor here, and that comes as the central banks of the ECB, the Bank of England, the Bank of Japan all seem to be sort of reining back in their sort of previously more hawkish outlook that or signals that they've been sort of giving the market, and they're sort of reining that back in. Carney especially, but also Kuruda of the Bank of Japan, and to an extent with the data in the Eurozone coming in sort of much lower than expected, inflation as well an issue, that you've seen the ECB sort of pulling back a little bit on the reins as well. So we've got a lot of key tier 1 data this week that the market's looking out for. Certainly growth is on the agenda with the PMIs, how the PMI is going to develop through the week. We've also got Eurozone inflation, the flash reading of inflation. That will be important, certainly I think for the Euro, and obviously for the US wise we're looking at the FOMC and the non-farm payrolls report. So lots going on this week. So in terms of how forex markets are looking, well, euro dollar with that strong dollar move that we've seen in recent week or so, we've seen euro dollar breaking down below 121 at 55. That is a key move there. That completed a big sort of 3.5 month top pattern. Means that euro dollar sort of pulling back towards 120 figure, likely in due course, possibly even below that. 119.15 is a key level. And as I said, eurozone CPI will be a key factor at play this week. Also the PMIs, will they continue to sort of fall over, or they start to stabilise? And obviously looking further back towards the FOMC, key factor there, but also non-farm payrolls report. Will we see the average hourly earnings continuing to drive higher? So lots going on euro-dollar wise this week. In terms of cable, well, we've seen sterling under a significant pressure as the data in the UK has significantly disappointed in recent days. Certainly the GDP on Friday was a key factor, and you've had also political developments with the resignation of Amber Rudd, that adding further pressure on in terms of possibly pushing out sort of the balance in the cabinet towards a more harder Brexit, possibly, and the implications that that has, and certainly that has impacted on sterling, breaking a long-term uptrend, not confirmed yet, but breaking a long-term uptrend on an intraday basis today, sort of pushing back towards 37.10 on cable. And it's interesting that we've seen euro sterling as well rallying above 88 pence as well. So some key moves there. In terms of dollar yen, bit of a consolidation really, as the yen has sort of gone a little bit sideways in the last couple of days. Yen starting to perform a little bit better, but I don't really see this as an environment where the yen is going to sort of proliferate and be strengthening. I think this is going to be the dollar big mover, which is going to pull dollar yen higher back towards 110 figure area, likely at some stage. We've also got the RBA this week. Watch out for that, and that could be a key driver for the Aussie through this week. In terms of equity markets, we're in the midst of earnings season. It's a pretty strong earnings season as well for the States, but you're not really getting the traction off that. It seems as though the expectations have been so elevated in front of this earnings season that the companies are really finding it difficult to top expectations. Not necessarily beating estimates. Estimates and expectations, in my opinion, are two different things in terms of US equity markets, and I think that is a key factor, that expectations of how the earnings season is going to pan out seem to be so elevated that it's really difficult for the S&P 500 to perform well in that situation. FTSE 100 is the key mover here, though. We've got the sterling weakness and strong FTSE trade playing out at the moment, and the more that sterling corrects back, the strongest that FTSE 100 seems to get. The DAX big resistance at 12,600 is key. That's a key level for the last few weeks, remains key on Monday morning, and it still is a barrier that the DAX bulls are yet to really get rid of, and that will be a key factor through this week. Commodity prices. The strong dollar is a negative impact on gold and commodity prices. However, we have the strong dollar being driven by inflation, and inflation is seen as a gold hedge, as a hedge, and that gold is used to protect against. So subsequently, there's an element of demand for gold. The selling pressure is not really coming through on gold, which is interesting. We've got that big floor at 1300 to 1310, continues to remain intact, and I think that is something that will continue this week. And even if it is broken to the downside, I'm not expecting gold to go too far to the downside before it gets some sort of support coming in. I think it's an interesting trade on that regard. Oil, it seems to be holding up, although just waning a little bit this morning, and that's come through with the rig count in the States rising, driving US production higher, and the sort of underlying sort of support for oil comes in with these potential sort of reinstatement of the sanctions against Iran, as President Trump seems to be rather negative on Iran, and I can't imagine that he's not going to I can't imagine he's going to pass up the opportunity to reinstate those sanctions, seeing as he's been so negative on Iran, especially surrounding Syria, for example. So that is an underpinning of the oil price at the moment. WTI seems to be holding pretty well, sort of 65 to 67 area. Nice basis of support there, so watch out for that sort of breaking. If it does continue to move higher, 70 big figure is a key move to get out to the upside, to really sort of open the upside once more there. But as I said earlier, in terms of your economic updates throughout the week, pretty much across the board tier 1 data that we've got to drive markets, and we're looking at an awful lot of sort of implications of inflation this week. Not only the average hourly earnings at the end of the week in the payrolls report. Don't forget, I think average hourly earnings is more important at the moment than the headline payrolls number. But also on Monday we've got the core PCE, which is expected to jump to 1.9%. I've got the data here on the chart, where you see all the inflation numbers for the US. Inflation seems to be picking up, doesn't it? Expectations of inflation have been growing for the last few months. We're also seeing the hard data now rising. CPI, core CPI above 2%. Core PCE expected to come to 1.9%. And average hourly earnings, are they going to start to gain traction and really start to pick up? That would be the final piece in the jigsaw, really, for inflation in the States, to really start to generate that sustainable move to the upside. So I wish you good luck in your trading this week. Lots going on, and I'll speak to you next time. Thank you.